Three, two, one.
Hello, hello, hello. Welcome, everybody out there in Facebook land. This right over here is Josh Weidman. My name is Judah Hoover. I am a real estate investor and a realtor, and Josh is a hard money lender and a real estate investor. We were just talking earlier this week, walking a project that he's working on and going really great, and that we're working together on. And then over here on the other side is a new friend of the show, gentleman by the name of Rich. And really appreciate you.
Guerra, right?
Guerra, yep.
Great. All right. Good announcement. All right.
Appreciate you coming on, my friend. And Josh is going to do a quick little introduction for you.
Yeah. So I was introduced to Rich. Like, sometimes you meet people and you kind of meet in passing. But when it happens 3 or 4 or 5 times by accident, it's kind of serendipitous. But
it's like God or the universe or Yahweh, right. Whatever. Somebody's telling you
exactly
we need to get together.
So I'm at a real estate investing meeting up in Harrisburg, and he starts talking about flipping houses in Hershey, and a little bit of background. I mean, this is 10 years ago. I tried to market to the Hershey area, and I fell flat on my face to the point where I was just like, you know what? I'm not spending, another $5,000 on mailers. I'm just not doing it. Right. And moved on to other markets. But Rich starts telling me about how he's flipping all these houses in Hershey, and he's doing, these higher end rehabs and stuff. And then the meeting ended, and we never even touched base until I took my son into preschool. His daughter's in the same class. I met his wife, and boom, we just we end up funding a deal for him that is really this phenomenal project that is now hitting the market. You got people fighting for it, and I thought it would be a really great opportunity to bring Rich on here for me to ask him some questions that I haven't asked before. And also I think he's got some really awesome insight, to the market right now, and especially this higher end market. It really seems to be on fire. So, Rich, welcome.
And Rich, you're share with us here. You're a full-time kind of like high-end, not entry level flipper. Like you do price points of like $250 and above is kind of where you are in the marketplace.
Correct. Yeah, we steer away from the lower end flips. I've probably done a handful, but our forte is definitely on the 250, like the one Josh is talking about right now. We've got listed at 650.
Yeah, wow. And I mean, it's all a 650. But Rich, before we jump in and start talking about the property, tell me about yourself. I always like to find out, how the heck did people stumble into real estate investing? How did they get here? What was the motivation behind it? What did you do before you got involved with real estate?
Yeah, so my background is in economics and finance. I used to be a regional banking director for the old Wachovia Bank. And back in 2006, I was transferred out here from New Jersey to run the Pennsylvania. And at one point, I ran from Pennsylvania all the way through Manhattan for them. So I launched their Manhattan division. Long story short, back in 2008, when banks started to run into some issues, I was on the highest end of the pay scale. Basically, there wasn't a fit for me at that time. So
really quick, Rich, just a quick little joke here. I always tell people I spent 15 years in the mortgage industry. I worked for a subprime sweatshop. And then after that, got my own personal banking license, and ran a boutique lending where we did commercial, residential, A-paper, and subprime, and then also hard money. And I always said I got out of the lending industry when these two guys named Dodd and Frank came along and ruined the mortgage industry.
Put it to its knees, yeah?
Yeah.
Yeah. So, and a lot of that is what we experienced. So, not to spend too much time on the background, but it was a time where banks were struggling. I was at the high end of the pay scale, and every bank wanted me to do what I had done at Wachovia in 2008, which was unrealistic.
Right.
I flew all over the country doing different interviews and finally came to the realization that I was not going to relocate my family to only be out of a job in 2 years again. So at the time, it gave me great exposure.
That's great wisdom there. Stop and pay attention to that. If you have a great success in the past and the market shifts and you recognize in humility that you're not going to be able to recreate that success, don't take a job where somebody's expecting you to do that, because ultimately you're going to fail and ultimately they're going to let you go. That's
Correct.
what I hear. Is that another way to say what I think
that's
you just said?
100% what I'm saying. Yeah. It was interview after interview. Hey, can you do what you did here? No, I can't. It's different. It's a different market. It's different times. Yeah. I wasn't in a position that I wanted to put my family through that. Do you know what I mean? You have to realize where your limitations lie. And at that time, and even today, banks have an unrealistic expectation of how things work. Charlotte, I remember going to meetings in Charlotte and, somebody saying, well, why can't we just move this number, 2% here? Yeah, it's 2%, but look at the size of my market.
Right.
And what does that 2% really represent? And no, it's not going to happen. But what I look back on and say is I got great exposure. I managed the whole investment spectrum for Wachovia. I used to work at Merrill Lynch. I developed their broker division in New Jersey. So I think, that gave me a great insight to investors who really trusted me once I left the bank. And, I started managing some of their money. We started doing some real estate transactions. In the past, I've owned a mortgage company. I've owned a real estate company. And what I realized today is that, the mortgage company, I kind of partner in it in a way, but I'd rather them make their money, keep them good at what they're good at. The real estate company, I still have licensed people at my disposal, but I want real estate agents to make their money. I manage the investment side of things and the identification of properties, and really what we do today and where our big success lies is in the manpower that we have. So when I first started doing this, it was, as you all know, it's very difficult to have good labor. And the main reason is because you're not dealing with the most educated people or the most responsible people. But we've had an opportunity to build crews, and we've built it in a way where they've got capital invested into our business. So they've got skin in the game, and we've been able to have a lot of success at that. That keeps the quality of the work up, it keeps timeframes in line, and it keeps costs down. So I think those are the three major components to what we do.
Quality, time, return time, and cost. Yep, there's I call it the triple-headed dragon, and it's very hard to slay that beast because that forms a triangle, and no two people are at the same spot on that triangle. Even looking at the same job, even if you look at the same job and you're talking about doing the exact same fixtures and finish, well, what level of fixtures and finish, and what level of carpet are we going to do? Or let's redo this hardwood floor. Well, okay, at what level are we going to do that, and who are we going to pay? And so cost, turn time, and quality is a bear.
Yeah. Well, Rich, how did you as you put this together, do you ever find a struggle to make sure that you keep your guys working? Because I've been on the other side of this conversation where, you got crews out there and it's always a battle between keeping them working constantly and putting yourself in a position where maybe you buy an asset that you didn't really plan on or wasn't really, didn't really fit the model, but you knew, hey, look, on the next one, I'm going to make it up by, because these guys are going to keep working. I'm still going to be able to pay half the labor cost or, as opposed to subs.
To be quite honest with you, Josh, a lot of it is where I see a lot of people making mistakes is trying to have a low end crew, a mid end crew, and a high end crew. That's never going to work for you. Okay. Because you can't demand certain quality based off of the house. So what my motto is we do good work wherever we go. Okay. It's not going to be a different the material may not be the same, but the craftsmanship is absolutely going to be the same. So to answer your question, how do I keep my guys busy and how do I keep crews intact? We've been blessed by the fortune of, starting gradually, right? We started with one crew. Once I got it to the level that crew was maxing out, and this is where I gave skin in the game. So I call them my foremans, but all of my foremans started out in that first crew. So today I don't have just a GC managing a project. I've got a guy that I know, like, and trust managing my projects, and they've been with me for a while. They understand the criteria that I have for the finish, for the work, and that's what brought it to the next level. And these guys are responsible for these crews, and they're responsible to the quality of the craftsmanship. So
this brings us to a question from Steve. Steve commented even before the show started about where do you buy your materials? Like, how do you choose your finishes and your tubs and tile and all that kind of stuff? Is it templated, or what do you do?
Yeah, you have to, once you get to a certain level, you've got to buy in bulk. The Home Depots, the Lowe's, you get some material from there, your day-to-day material, but your big things you have to buy in bulk. And that creates other problems, which is warehousing and different things like that. So it's hard to say how everything comes together, but you have to start putting those pieces in place so that you have the material at your disposition. And you've got to be able to manage that material, inventory it, keep track of it, so you don't see dollars going out. You can't waste material. We try to, and I'll get back to the next point. Sometimes even on my lower end flips, my 250, 350, they may get material.
Those low end flips, Josh, 250 to 350.
Well, listen, wait till we see this project here. I mean, we're getting along. I'm telling you, this is one of the best deals that I've ever seen. It's but keep going.
So a lot of times, some of my lower end projects will get quality material because I buy it in bulk. And that way, what we've determined is that I can demand higher dollars. So my 350 house may be, in an area where the highest last comp was 75. Do you know what I mean? But you've got the quality. What I like about Hershey is that there's a good group. You've got a good stable base. There's I've had properties that I've sold that people are putting down 30 and 40%, where the appraisal doesn't really come into play because they understand the quality and the work that we're doing. So an appraiser is going to look at a house as a house, and you can't do it that way, right? The craftsmanship, the design, the layout. Go ahead.
Yeah, I was just going to say we skipped a step here, and I think you put a nice bullet point on that that point. I want to circle back around. So there's just one little half step we're missing. Why real estate? You got out of banking and you watched a Carlton Sheets seminar, or what? How did that transition happen, and what was that like?
So I've always invested in real estate, even when I was in banking. I used to have rentals. When I did my first flip, I realized that rentals was not the way to go. So I felt at the time that you can make a lot more money flipping than you can in rentals. And we started shifting that way. When I left the bank, a lot of the investors that I was managing money for at the time with my group reached out to me and said, "Hey, what are you doing now?" And I flipped it right over to real estate, and that's where a lot of our investors are coming from. So to answer your question, there's really a shift in what you do. I like real estate because it's equity based, right? So you invest, $100,000, you've got a physical, tangible asset. that you can touch, feel, and taste. You know what I mean? As opposed to a stock. You started out in a sweatshop and mortgage. I started out in a sweatshop with stocks.
Right.
Pounding the phones, cold calling. These guys today have no idea how to cold call. You know what I mean?
Right.
So it's a different world today. But what you realize is back then we were selling stock over the phone, and before the transaction even settled, we were probably selling it. And you were sending me $500,000 to $1 million. And you were never going to taste, touch, or feel it. You know what I mean? So if that's not a hard sell, I don't know what is. And we were successful doing that. So what I'm saying is, real estate is one of those things that, can you lose money? Absolutely you can, right? But it's more of a matter of, if you don't sell it, it's almost like a stock. If you don't sell it, you haven't lost money, right?
Right.
At the end of the day, you may have to wait a little bit. You may have to take a small haircut on what you're doing, but the analyzing of the numbers is absolutely critical to this business.
Yeah, I want to make a point here because I think this is very important. What you do before real estate impacts what you do in real estate and how you do real estate and the level at which you do real estate. And you shouldn't ever judge yourself by anybody other than yourself. Right. So whatever your skills are, I tell people, what you were something before you wanted to go into real estate. You build up a set of skills. Yep. Use that in real estate. Yep. And so you had the ability to organize and manage large groups of people, and that has transitioned into how you do real estate. You had other those executive leadership skills that you and building up people. This is the other thing that I see that I'm hearing from what you've said is you've invested in your guys, not just through equity and not just giving them a taste of the profits and not just, other things like that, but just that believing in them and coaching them and training them and helping them grow as individuals. Yeah. So that they are better individuals for you and for your company. That's a lot of what I'm hearing you say without you directly saying.
Yeah. And, you get tagged as the contractor or the investor or, however you want to be tagged. But at the end of the day, what I think I do differently and why my guys stick around is I treat them with respect. To your point, I treat them and I coach them just like I coached all my professionals in the past, right? We have something that I used to preach all the time, and it's situational leadership, right? You can't ask somebody to do something that they don't have the capacity to do, right? Right. If I'm going to tell my 8-year-old son to go back up my truck in the driveway, I better tell him, hey, you grab the key from the table, you put it in the ignition, make sure your foot's on the brake. You got to give them every little step along the way. Right. When you have someone that's a little bit more experienced, you could just say, hey, just back up the truck, right? So my point
is analogy.
You have to know where to give direction. Now, if I tell you, hey, go back on my truck, and I say, hey, grab the key, make sure you step on the brake, make sure you look both ways before you back it up, you're going to be like, what's wrong with this guy? He doesn't trust me. Do you know what I mean? Right. So you have to know how to manage your individuals and really know what the capacity of your team is, and make sure you support them at times of support and that you give them leeway when the leeway is needed. It's a balance act.
Well, and I want to circle back to Steve Mahler's question, and this is off of the comment section, but he asked before the show started, like, do you let your contractors buy your material? Do you let them pick things out? And my blanket response to that is no, never have the contractors pick anything out. But that's not really true, because that's not what you're saying. I'll bet you that your wife picks out some things that some finishes in your house, right? And you're able to delegate that to her, that responsibility, because you trust her the outcome of what she's going to select.
Absolutely.
And I think that a lot of that plays in. Steve, if you're dealing with a contractor that you have a relationship with, like Rich has with his guys, like, they know what you expect from them.
Right.
And they're going to make a selection that it might not be exactly what you pick, but it's not going to be something out in left field either.
Yeah. And if you're going to make every decision, Josh, you're never going to do business.
Yeah.
Right. So I believe in educating my group. I believe in educating my guys. I believe in showing them, teaching them what I look for. But I can't expect them to pick something exactly like I would have. But I can expect them to pick something that's got the quality of what I'm looking at and that's going to work. And if it doesn't, you know what? That one object is not going to make or break this deal. I'm going to educate him on why that piece didn't make sense on this one and where we're going to compensate for it on something else. Yeah. And then we're going to go ahead and really educate him for the next time. Do you know what I mean?
Two points here. So my dad always said, my dad raised 6 kids. My parents raised 6 kids. But one of the things that my dad always said was that he allowed us kids to fail safely. And that's what I hear you saying with your contractors and your foremen is you allow them to make a decision. And if it's a wrong decision, you help them on that. And I heard an Army general, and I forget who it was now, but he said that when he was like a colonel and he had like people in the field and stuff like that, he would say to them, how do you think we should solve this problem? And as long as their answer to him was somewhere in the ballpark of what his suggestion was going to be, he just let them run with it because their solution was ultimately a not as great solution, better executed, could be better than what you think of as your perfect solution. And I hear a lot of that give and take in what you're saying.
Absolutely. And your guys can't be scared to make a mistake. They can't think that they're going to be fired because they made a mistake. They can't think that they're going to be yelled at because they made a mistake. Look, and I tell all my guys, we're going to make mistakes. I make them, you make them, we're going to make them. It's a matter of how we're going to fix them going forward, right? Because there's nothing worse than a paralyzed individual, right? You walk into a job, you can't get me on the phone, and you, rather than make a mistake, do nothing. Guess what? You just cost me 2-3 hours of labor for absolutely nothing, right? I'd rather you make the mistake and we fix it later and we move it along. Do you know what I mean? But that comes through time. It comes through trust in the guys that you have. It comes through putting things together. Do you know what I mean? I've worked on projects with other people's crews at times, and that's one of the biggest things that I see. Like, oh, I can't do that because I haven't talked to so-and-so. You've got to give your guys the leeway to work and educate them along the way. Do you know what I mean? I think that's the best format.
Even if it is wrong.
Yeah. There's no one right way to do anything at the end of the day, right? So, you know, I've got twin boys. They're 8 years old, and you can ask any one of them. They'll walk into a house today and they'll say, Dad, what's the room that's going to sell this house? We'll find something that's, they already know, and my guys know, hey, what are we focusing on this house? What's the focal point? What's gonna make this house pop? Nice. And that's what we drive. Do you know what I mean? But that's a message that I drive, and I've been driving for a very long time.
That's a great. That's a great business principle. Number one, it's a great fathering lesson. Number two, that your kids are already that you're already picking up on that. So our time is flying by here, and I love a lot of the stuff that we're talking about. Where do you see? Let's go a little bit future looking here. I mean, obviously nobody has a crystal ball.
Hold on a second. We're gonna forget. We got to take a look at this property because this property is a big deal, and I really wanted to bring this up. Let's go down the rabbit hole, and then we'll circle back to the property if that's cool. You know, we'll talk about
the rabbit hole. The rabbit hole that I'm just curious about, and we definitely want to talk about the property is. What do you think 2021 looks like? Good, bad, or different? Obviously, with all caveats of nobody has a crystal ball, but there's a lot of people who were before the pandemic talking about that there's a correction or a downturn coming in real estate. And even with the awful economy that we still saw strong to actually strengthening real estate. So that's kind of our take on things is that, hey, we're going to make as much money in this market as we can. And you know, 2 years from now or 2 decades from now when things correct, we'll be ready for it. But do you see good, bad, or indifferent in the next 18 months, let's say?
Yeah, so I think you have to almost talk about that by segments, right? I think the segment that I'm in, that 350 to 750 range, I don't anticipate that that's going to take a major hit. And the major reason why is there's a lot of, especially in the Hershey area, right? I think the last couple homes that I've sold have been sold to New Yorkers, right? And I like to gather feedback when I sell my homes, and a lot of it is, hey, we wanted to get out. of New York and we're coming over this way. We realized today that we can work from anywhere. We're going to be doing Zoom calls. We're going to be doing this. So I'm modifying my homes to have an office space, to have that location where you can have that Zoom call, to have the place where kids can study from home, have homeschool. Like, all those components are important. Do you know what I mean? So I don't think those folks, it's my opinion, are going to be losing their jobs right now. I think your lower end homes, right now, some industries are hurt. Your waiters, your bartenders, your cooks, your restaurant staff. Right now, those things are starting to have an impact. That first-time home buyer market may have a little bit of a shift, and then the flip side, maybe it doesn't. Maybe it creates opportunity. I've always been the kind of guy that looks at the glass half full rather than half empty. And I think that there's opportunity anywhere, right? And we just have to. We started talking about shifting, right? We have to shift to what's happening. And I feel very comfortable with what we do right now, that we're in a good place in the market. I don't see the next 18 months being anything negative. I do agree with you. If there's a correction coming, I believe it's in the 18 to 24 month period. Once they stop printing money and have to figure out where it's all coming from. But yeah, that type of thing. Does that make sense?
That's great. Josh, talk about that's excellent feedback and commentary. Appreciate so many of the things that you've said. I mean, just so many golden nuggets here that really apply across the spectrum. And you're right. I do think that if the first-time home buyer market suffers, really that all that means is you need to do more turnkey flips. You're flipping more to real estate investors, and I'm working with a lot of those people right now who they're buying properties that would be suitable either to a high-end rental or to a first-time home buyer. And I think that there's plenty of room in the marketplace for that, and also burring to long-term rentals and a lot of what you're saying there. And if the first-time housing market does take the first hit, that just means that there's more tenants out there. That just means that there's more rentals out there. So yeah, lots of good stuff. All right, Josh, you had a deal.
Yeah. All right. So here's the deal. This is how Rich and I first started doing some business together. He bought this property that gave me the address. It's in Hershey. I look it up. And I said to my wife, I think we made an offer on this. And it's crazy because this place, it was originally listed in June 2018 for $550,000, which at the time was entirely too much money, right? But it's a nice size house, 3,800 square feet. It had an unfinished basement. And then something happened, and tell us about that.
Yeah, so the house got an offer. I believe it was at 485. It was in the closing stages, and the realtor listing the house at the time did not turn the heat on, and pipes burst. I think it was about 3 weeks before closing. And the owners of that house were no longer living in the house. They rarely lived in the house.
They were overseas, I thought.
Yeah, he was overseas, and the water ran for a good amount of time. So long story short, the house needed to be pretty much brought to the studs, completely gutted down. Yeah.
So imagine, I'm going to show a photo.
If it wasn't pressure treated lumber, it was taken out of the house.
Exactly.
All right. So this is what the house looked like prior to prior to the whole breakdown and flooding and all that kind of stuff. They just showed there's even no interior photos, but I found some based on a past listing, and essentially what we had is a pretty regular colonial house. Is that about right?
Correct. Yep.
Okay. All right. So tell us what you did. And it was a 4.2.5 at that time.
It was a 4.2.5 at that time. We felt that the house had a lot of upside potential. And what we decided to do was open up the concept. So it's today it's a completely open floor concept. You can pretty much go throughout the house and really feel the space. We created a foyer area that really is enticing to anyone that walks into the property. And we made sure that there was a full suite in each room. There's 2 rooms that share a Jack and Jill, and every other room in the house has a full layout.
I love that.
Yeah, I mean, I walked into this place before it even, the framing was done basically, and there was drywall up. It was stunning. I mean, it like took your breath away walking in here, and the kitchen is really fantastic.
Moved the kitchen. The kitchen used to be in the rear corner. We moved it more as a central focal point. I talked a little bit about like my kids looking at what's going to sell the house. We felt that kitchen, that openness, that foyer is really what's going to do it.
I got to tell you, I'm looking at that and I'm thinking about a friend of mine's house that I go over to, and like we get together and like one person brings a main dish and one person brings a charcuterie board and one person brings 2 or 3 bottles of wine, and like we just get together, not during COVID, obviously. But when we try to, and we all kind of like just gather in the kitchen, and then our kids go and play in the rest of the house. And so I'm seeing that, and I'm thinking not parties like, high school, parties, but I'm seeing that. I'm thinking high end, elegant, entertaining of friends. You're right. That sells the house.
Yeah. But it doesn't end here. And this is actually hilarious. You see this hot tub. This is a step down hot tub. Funny story here. Last inspection of the property, I go through, I take my photos, and this is like half staged. And it looks like there's this little owl sitting right here next to the tub. I go up to it. The owl's alive and it's flying around the room. I thought it was a statue. Anyway.
So is this part of the pressure envelope of the house? Is this conditioned space out here? Or
it is. Yep. It's all conditioned.
So you have an indoor hot tub.
Yes.
Yeah. And it's not like an odd location. It's like perfect. Like the layout of this place is awesome.
I love that chandelier. That chandelier choice is an excellent choice because a lot of people wouldn't go for that there. They would, if you were mostly flipping in the $250 to $350 price range and you were working on this, you might put a nice chandelier in there, but it wouldn't be a elite chandelier like that.
Right.
And this is one of our pride and joys too. We make sure our master baths really stand out.
Yeah. Nice closet in here. I mean, really, really well done. And this is one cool thing about this house. Every bedroom has a bathroom.
Yeah.
Right? Yeah.
So it was a 4 1.5, and now it's what, a 4.4?
4.6. 5.6. I'm sorry.
5.6. Yep. I mean, and now this is the lower level. So you've got all that space up on the main living areas.
Right.
And, it's really rich. You did a great job here, and you can see that the exterior is fantastic too. It's like right in the woods.
Great privacy to the property.
Yeah.
Well, I can tell you did a lot of landscaping, really opened it up from what those other pictures and photos looked like. Mm-hmm. A lot of people don't realize that, they think they have a nice house and they don't realize just how overgrown the landscaping has become. So is that settled yet, Rich? Or is that listed in pet?
So knock on wood, we've got a couple contracts in on it right now. We're holding an open house this Saturday. If anybody wants to go take a look at it, or is interested, from 12 to 3, we're doing an open house, and we're holding all offers until the end of the open house. So
that's awesome.
This is 410 Laurel
Drive, Hershey, PA, 17036.
Yeah, I tell people,
my wife would absolutely kill me if I didn't plug her staging. She does absolutely all our staging. If there's someone interested in staging, by all means, we'd be more than happy to accommodate.
Well,
I think staging does 100% to a property when you go to sell it. It's very difficult. In this particular house, it's a great point because there's a lot of space. And if you don't show people how to utilize the space and how it can work for them, it oftentimes makes it like, wow, that's a great space, but what would I do there? Do you know what I mean? So the staging from a show perspective, I think really is a fantastic plug for this house.
Yeah,
Okay.
I was going to say that there was only so many comments I could make, but while I was looking at that, the staging really makes it pop, and it makes you show how you can utilize the space. And I think, I mean, not for nothing, I think at all price points, staging is important. When I'm trying to fill a 3-bedroom, $950 a month rent property in the city, I have owners who are like, well, should we wait till the old tenant gets their stuff out? And I'm like, no, you don't understand. Even though that stuff looks kind of horrible, it gives depth and size.
Yeah.
And I want pictures of that, and I want people coming through, and I want to see how other people can use it. Most people, even if it's junky, they know how to look past all that and just see, oh, look, a 6-foot couch will fit there. Oh, look, a couch will fit there, and it will divide up this space nicely into 2 different rooms just by having, a couch sale or whatever the case may be.
So, Rich, all right, how would somebody for staging? What's the name of your wife's company?
So my wife and I work through the same company. It's REM Home Innovations.
REN Home Renovations.
M as in Mary.
Okay. M. And how might somebody get in touch with you?
The phone number is 515.
Yep.
517 0368.
Yep. 0368. Perfect.
Yep.
We'll put this on the bottom here.
If you want to email,
go for it.
Email is REM Homes with an S at the end.
Yep.
1124.
Yep.
At gmail.com.
Gmail.com. All right. I'm going to add this at the bottom. Let's see here. Perfect. Okay. Yeah. And you can get in touch with Rich right there.
What we need to do the next time you have one of these big flips come in, I want to walk that property initially with you and do a show about that and just kind of talk about what you're thinking about doing. And then 3 to 6 months later, come back and say, and we'll do just like Josh did here. But I mean, we kind of piece this together going backwards, but if we intentionally do it next time, we'll be able to really highlight, hey, here's what we did here. Here's why we did it here. Bob Vila shouldn't be able to have all the fun.
No, not at all. And even on this one, Josh, I can get you some before. We have a lot of great footage of the property before, during, after.
Yeah.
And we can really showcase it. But yeah, I'd be absolutely open to that, Judah. I actually have a big one that we're working on right now. It's about 7,300 square feet in Harrisburg.
Yeah. That you told me about that yesterday. I was like, yeah. Huge house.
So let me ask. So we've got. I mean, we're already 6 minutes over time, but I'm just kind of curious. I try not to ask people too many questions about I try not to ask people how much money you're making a year or anything like that. But just how many of these projects do you have going at any one time? Let's ask that question. I'm just looking for a scope of what you have on your plate.
So ideally, our points are 12 properties. We usually, I want to have 15 going at one time, but we try to stay between
like 3 or 4. 15 properties at one time in Central PA like that, or how big is your footprint?
Central PA is probably about 6 of that. We have some in New Jersey, which encompasses a big part of it as well.
So where you're doing postcard mailings, you're doing, I mean, what are some of the best marketing, that you've found to get these properties at this higher elite price point?
So a lot of times it's more about working with real estate agents. So I've been able to educate a lot of my real estate agents around what I'm looking for, when to bring me on board. Sometimes I'd rather get brought on board before it lists. We've got a couple of different scenarios where I've got one that we're running right now that was an older couple and they were looking to get out. The real estate agent was able to show them, hey, look, this property is worth more if you rehab it. They don't have the money for the rehab. They don't have the experience to rehab it. What I'll do is I'll go in and I'll say, look, let's just do a BPO on this property right now. This property in its condition right now, you will get, let's just say $300,000. Okay. That $300,000 number is what you'll get in the condition that it's in right now. I'm willing to take some risk on this. I'm going to rehab the property. Okay. I'm going to put you in a hotel for 30 days. Okay. And during that time frame, I'm going to rehab your property. Anything above that 300,000 that we make on this property minus my expenses, and I'll show them what my rehab number is. Okay. We will split, or we will 60-40, or we will do something along those lines. But that does two things. It helps somebody make a little bit more on their property that they know they could do. It helps them get it actually done, not getting ripped off along the way. And it actually gives me an opportunity to really get into this market and inexpensively be able to do a flip.
Well, you also don't have 300. I mean, that's $300,000 that you don't have tied up. So a good friend of mine from Phoenix who's been on the show, Greg Swan, he talks about that all the time, because you only have one set of closing costs, not two sets of closing costs. And there's just a number of different ways that you limit your exposure, even though you're splitting the upside, but you're splitting the upside. And a percentage of something is always better than everything of nothing.
Yeah.
So yeah, that's excellent. I know people who are in like the California market, in the San Francisco market, and that's almost exclusively what they do.
Yeah, it's becoming more and more popular. That's probably the sixth one that we do like that. So it's definitely starting to become something that we're going to focus on. But the education of the realtors and just, I told you before, we owned a real estate company at one point. We stopped it because that's not where I make my money. That's not where I want to make my money. I'm okay with you making your money. However, give me the opportunity to get into this property at a right price, at the right level. I'll give you the listing once I'm done. Do you know what I mean? It's your listing. You bring me the property. It's your listing. And you're going to make more money than you're making right now. Do you know what I mean?
Yep. That's excellent, man. Well, listen, we've got to wrap up the show. We are already long. Do you have any other pearls of wisdom, comments to new or inspiring investors, or people who are maybe in the $250,000 price range looking to get into the $600,000 price range? Just parting comments.
Yeah, I think it's a different price range. I think before you get into it, understand it. I'm always open to partnering and educating. There's enough business out there. There's a lot of people that think, oh, he's going to steal my bit. No, the more people I can get doing this in that Hershey market, the better we're going to all be, because it will become a market that's known for what we do. Do you know what I mean? So there's enough deals out there. It's not about that. My big plug is, I'm always looking to partner with people. I'm always looking for investors. I think we have a good platform. Even through COVID, we've been able to sell all our properties. I think, Josh has probably been a part of like 4 or 5 of them. And our properties are selling within, a couple days. Even before COVID, because I know that's something new, but even before COVID, we were, 15 days on the market. So it's about the quality of the craftsmanship. It's about, paying attention to detail. It's about getting a lot of things done. So I'm absolutely open. If anyone is interested in investing with us, just feel free to reach out. We can have a nice conversation about it and figure out the best way to do it.
That sounds excellent. That sounds very, very excellent. All right. Well, listen, Josh, let's wrap this up, and
absolutely.
We'll be back here on Monday.
Exactly. We'll be back here with bells on Monday. Everybody have a great weekend. Until then, go out and make yourself some money. See you guys. Take care.
Thank you, guys.
Everybody.